All right, topic A tonight. Is this new rally for real? The Dow jumped over 12,000, 178-point gain. The S&P also climbed a good number. It was up 19. NASDAQ climbed 48. 1%, 1.5% across the board. And the big market event may have driven this, AT+T bidding for T-Mobile. Now, here are some of the questions we need to tackle. Are we back to the reflation trade? And you know, global stock markets rallied everywhere. So is event risk really falling? And then, of course, what about the dollar? It just keeps sinking out of sight. Gold, by the way, up 0.5%. Are people willing to take risks again? Let's go to our own risk takers. Here now is Brett Arends, columnist at the Wall Street Journal, Lee Munson, portfolio advisors, and CNBC contributor Don Luskin of Trend Macro right here with me on the set. But I go far. Lee Munson, is event risk so manageable now with respect to the potential disaster in the nuclear side of Japan? The human side has been a disaster from day one. Is that nuclear catastrophe off the board? Is the Libyan problem off the board? Are you, Lee Munson, back in the market taking risks?
No, it's funny. I'm not. This weekend, I wake up in the morning, Larry, and first of all, everybody on CNBC is saying buy. There's not a problem with Japan. There's no radiation problem that's worth mentioning. But you know what? I see, Geiger counters going off, not just being used, but going off in certain supermarkets in Japan. I think this is too much happy. I think that the nuclear problem, we do not know what's going on, and I don't want to take the risk. The Libyan airstrike was awesome today. Allowed the market to rise up. I sold all my condition. 100% of my hedge fund right now, as of about 6 hours ago, Larry, is in cash. I made my money for the week. I want to sit back. I think event risk, the VIX, the volatility index, it's come down too far, too fast. I still think there's things that we don't know about, and I think a cautious investor should be such a way. I think if you think
Lee,
event risk is gone, I think you're crazy.
All right, fair enough. Lee, when was the last time you were 100% in cash?
It's been months, Larry, so this is a significant thing for me.
All right, Don Luskin, you heard Lee Munson. He's 100% cash. He still thinks there's substantial event risk. What's your play? What's your position?
That makes it official. The event risk is over.
Official that you're not a pirate.
Well, there's always going to be event risk. If Yogi Berra didn't say this, he should have. The thing about the unexpected is it always surprises you. Who knows what could happen? All the bears who had all these scenarios about housing double dip and the euro breaking up and state and local governments, what ended up creating this little correction we've been through? Stuff that nobody was talking about. Libya, Japan, nuclear reactors. Surprises always come out of left field. But the market now has absorbed those things. They're no longer surprises. The news is out. There's been a short, sharp correction that was long overdue anyway. It would have happened on technical grounds even if it weren't for these event shocks. Ready to move on.
All right, ready to move on. So,
You go to Fukushima and you write this check about all these things that aren't going to happen, Don. Don, I think you're over-optimistic. I hope you're right fundamentally about the market, but I think that you underestimate event risk and you're going to get nailed on it soon.
But let me ask Brett Arends. Get him in here. Brett, are you underestimating event risk? You've heard Lee on one side. You've heard Don Luskin on the other. Where does Brett Arends come out?
I wish I was as certain about anything as these guys are about stuff. I respect them both. I'm never 100% either way. I hate to be dull. I like to be dull. I do see some value in the blue chips. I've been saying that for some time. I thought last week was a pretty good, a lot of stuff overreacted and there were some opportunities there. That's not saying I'm hugely bullish or bearish. Listen, I'll tell you one thing that did worry me last week, and it wasn't about, obviously the disaster in Japan was a human catastrophe, but just in the markets, the speed with which people were willing to, buy Japan and go contrarian on Japan. In fact, the ETF went sailing way above the net asset value. I was, everyone was saying, oh, this is a contrarian trade. Well, it's not a contrarian trade if everyone's making it. And the fact that everyone was so quick to be bullish does make me nervous. Now, I've got serious reservations about valuations overall in this market. I always like to say, listen, if you see a decent company at a decent price, buy it and don't worry too much about the market. I don't mind the valuations too much in the blue chips, but I can't say I'm thrilled about the market, and I do worry that there is too much bullishness still around.
Don Luskin, let me just ask you this. I want to get to AT&T and T-Mobile in a second, but just regarding event risk, what about the economy in the USA? You see consumer sentiment polls really plunging, and the inflation rate is really, the CPI could be 5 or 6% in the first quarter. Are you worried that you may be too optimistic about the economy and profits and the rest of it?
I don't think so. I mean, the hallmark of our economy for the last 2.5 years of crummy recovery has been that there hasn't been enough inflation. Bernanke's absolutely right. We need more, and we're
you're
getting
going to get 5 to 6%.
He's going to go on until he creates it.
You're going to get more inflation than you ever dreamed possible.
Oh, I don't know. You don't know what I dream, Larry. I could have a pretty big. I could have a pretty big dream.
I acknowledge that. I totally acknowledge that.
But we need a little bit of inflation, and if you look at what's happened since QE2, which has raised inflation expectations, it's corresponded with a complete renaissance in growth expectations at the same time. The U.S. has been in deflation for 2.5 years. Japan's been in deflation for 12.5 years. You want to do another 10? I don't.
Lee Munson, you heard Don on this one, too. Now, I'm just counting the beans. So far, January and February, the CPI has been hugely, and all I'm saying is there's a risk, call it an event risk, that that'll hurt profits, that that'll hurt consumers, and that that'll slow down the economy significantly. Now, we're going to dwell on this more in the next segment, but regarding stocks, Lee Munson, is there event risk in this jump in the CPI?
I think there is, and I think Brett made some exciting comments, which was last week, Lee Munson made a lot of money by this sheer exuberance of how quickly people are looking at, getting past the event risk. I think you have to look at things that truly are an event. Now, look at America Mobile Tower. It was down, significantly today. I think those are the things you should look at, things that are the fallout from the AT&T T-Mobile merger. And I think that if you think the stock market is going down, don't bother with dividend-paying stocks. I think that if the market goes down, you got to sell them all. If you really believe that the economy is going to do well, like Don Luskin says, I think that you got to go into the middle. I think you got to look at things with good earnings potential. I think you have to look at things that are ready to move and have a beta. Things like beta are things like Transocean Rig, RIG. Deere has a lot of beta in it. Even Goldman Sachs. Don Luskin say that he thinks it's not a great story, but he won't argue with the stat that it's a high beta stock, and if this thing really works, that's where you're going to make your money.
I got to switch gears. Brett Arends, I'm told you don't like the AT&T T-Mobile deal. Now, that really triggered a lot of the animal spirits in the market today. That, plus the fact that J.P. Morgan is putting up $20 billion to help AT&T finance this acquisition. Now, what is your reservation? Why don't you like the deal?
This deal is a disgrace. It's an outrage. I'm not usually given to speaking in such terms, but this deal must not be allowed to happen. The Justice Department and the FCC have to intervene. Listen, this is already a cozy oligopoly of 4 players, a cozy club. It will be taken down to 3. AT&T is effectively taking over a price wrecker in order to take it out of the market. This is the equivalent of Target taking over Walmart in order to shut it down so that it can raise prices. This will be a bad deal for consumers. This is great for the top executives at AT&T. It is bad for everyone else. We believe in free market capitalism. Well, we need a free market. Remember what Milton Friedman said. He said, listen, companies don't want a free market. They want a rigged market. They want a market that helps their stockholders at the expense of everybody else. That's exactly what this is. This is crony capitalism. It can't be allowed to take place.
Boy, that's unloading a lot in
I want
just
a rigged
about
market.
60 seconds. Don Luskin, what is your reaction to that? By the way, Adam Smith, the father of free market capitalism, did say if 2 businessmen get together in a corner, they will conspire against the consumer. I believe that's what Brett Arends is saying. Do you agree with Adam Smith and Brett Arends or not?
They might get together and decide on some dastardly, despicable deeds like figuring out how to take risk and invest capital and serve consumers better. That would be terrible. We must not allow CEOs to meet in private and conduct acts of capitalism behind closed doors. That must not happen. Now, on to this particular deal. I think it's a wonderful thing. I don't know if it's going to hurt consumers or help consumers, and frankly, nobody on this show does. But what
of course it's going to hurt consumers. There are very few things that are noble, and that is noble.
I want to make a macro point about this acquisition, and that is this is the first big acquisition to come through the pipeline in this economy that is being debt financed.
By J.P. Morgan.
That means that's right. So that means that the wheels of credit are starting to move again. The great deleveraging is over, friends. This is the green shoot of green shoots.
That is no reason to allow this deal to go ahead. Let J.P. Morgan finance another deal.
Guys, listen, both of you have good points, and I think I love what Don has to say. I love what Brett has to say. But listen, the game is rigged. It doesn't matter if it hurts consumers or not, but we're trying to fuel this up to jack up the Dow Jones. And the sooner we acknowledge that and trade upon that information, we can make our clients money, which is what we're here to do today. We're here to make people money, not scare them.
With all due respect, Lee, I'm not here ultimately I represent, I suppose, the readers of the Wall Street Journal and Market Watch. And, the fact is most people in America have more interest in being consumers cellular telephones than being stockholders. You know, listen, the idea that we should basically allow this deal to go ahead, which will hurt consumers, it will raise prices. That's the whole point of the deal. It's like a railroad taking over its competitor to shut it down. It's not to increase, it's not to cut costs. It's to raise prices. I mean, listen, I don't like coming on here and predicting the future, but this is
number one publication in this country because people want to make money and people want to get rich.
Wait a second. Capitalism works by serving the consumer, not being the master.
Hang on one little second. Don Luskin, is it necessarily contradictory that something good for investors is bad for consumers? Is that always the case? That sounds a little bit less free market capitalism and a little bit class warfare.
Look, in the end, if companies hurt consumers, they're only going to hurt themselves. You know, we know that. We know that all wealth is created by serving customers,
that's not true in a rigged market at all. That's not true in a rigged market. If you have an oligopoly of 3 players, they're all able to get together and raise prices.
Let's
look at the airline industry before Southwest.
So how many is the right number in the oligopoly according to you? Should it be 5? Should it be 6?
No,
you tell us,
to be
all
honest,
knowing one.
Well, you know, listen, I'm not the one who is basically saying this is going to be okay. The burden of proof is on people who say this is going to be fine. I mean, the idea that I have to be on the defense of defendants. We are already down to 4 players.
Come together and combine their private property into a larger aggregate of private property. They have to somehow prove that they have that
First
freedom.
of all,
they
we
have
have not allowed this degree of rigging since the Grant administration. We have not allowed this degree of rigging of the market since the Grant administration. And second of all, these are public airwaves. This is ridiculous. The idea that we should essentially allow these guys to form an oligopoly that will raise prices on the consumer. I mean, think of the airlines before Southwest and deregulation. Think of what the airlines were like. And the big airlines fought tooth and nail to prevent Southwest Airlines even getting off the ground. This is pretty much the same deal. Let another player come in. You know, the government has, the community, the national community has an absolute right to say there are some rules to this. There are plenty of other companies that will be able to come in and take over T-Mobile if Deutsche Telekom wants to get out of the U.S. market. This deal should not be allowed. This should basically unite Randall Stephenson against the rest of us.
You're opposed to the deal. I get that, Brett. That's you're coming in loud and clear, buddy. I just want to give Lee Munson a shot at this. Lee, what about other players globally, international players? In other words, Verizon and AT+T are not the only cell phone players. There are other players, are there not?
I'm not really aware of any. I mean, the only things I would ever consider are AT&T and Verizon. But to be serious, there are other players. You know, Vodafone wants to come in here and try to do something. Hey, they did. They own a big chunk of Verizon. So I think that, you know, when you're looking at cell phone systems, I think you're really looking at a utility. You are looking at a monopoly. I think Brett's right. I'm not opposed to the deal. I just think that the issue of the system is rigged is a foregone conclusion. We need to understand the system is rigged, not get upset when Don Luskin says there's no problem with that. I would just say that if you can learn how to basically make money off of the rig system, my investors are going to be a whole lot better than us worrying about it.
Going to 100% cash today probably isn't it.
Adam Smith, Brett Arends, thank you very much. Lee Munson, thank you very much. Don Luskin, thank you very much. And Adam Smith, thank you very much.
I enjoyed that very much.